Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. Before we start the webinar, I would like to remind to you, always and forever remember to review US government required disclaimers and never ever trade with risks you cannot afford. And everything I will do and answer in this webinar, I will answer to educate you about Fibonacci method. So what makes Fibonacci so different? What separates Fibonacci from the rest of the market? When market crashed in 2008, I was questioning the value of fundamentals. I was questioning the value of indicators. As I witnessed that indicators did not work, and I witnessed that stocks that have stunning earnings, stunning fundamentals were collapsing completely. 2008, when I developed the first strategy used in traders in US globally, from beginner to hedge fund traders, strategies that apply to any instrument and any time frame, that started at the time of 2008 collapse, when stocks like Chesapeake Energy had stunning earnings, stunning fundamentals. So I started questioning the market and asking myself a very basic question. Isn't it very clear? If fundamentals and indicators worked, wouldn't everyone be Bill Gates? This stock, Chesapeake Energy, is one of the leading energy stocks in US at that time was collapsing. Stock had stunning fundamentals and stunning earnings. This is the levels that show you with extremely high accuracy when stock will reverse completely no matter what the earnings or fundamentals are. And as you can view on the blog on YouTube channel, everything I demonstrate every day in day trading room on S&P E-mini applies to any instrument, any time frame, as price action remains the same everywhere, no matter what you trade. Price action is the core of the markets. Every single pattern keeps repeating on every single instrument and every single time frame. So here's the basic clue. Here's S&P E-mini, which is a derivative of SPY, derivative of S&P index, one of the most popular day trading instruments in US. Here's a chart on ES. S&P future has different abbreviations on different platforms. If I will change the name of the instrument, what will remain common? What will remain common on every single instrument is price action. It is exactly the same. So let's do the test in the room. And let's take a look what this price is telling us. Mike reporting to me he's not seeing the chart. Is anyone else having the problem of not seeing the chart, please? Is everybody else seeing the chart? Fabulous. Mike, are you seeing the chart? If you are not seeing the chart, please log out and log back in. So what instrument is this? Please tell me. Anyone knows? What instrument is this? Okay, because you see the numbers on your left. So let me change the name on the instrument. Let me ask you. Let me change the name because you're paying attention to the numbers. And let me ask you, what instrument is this? And I will show you multiple examples from the trading room of other instruments. What is constant about every single one of these instruments? One thing is constant. Every single one of these instruments has price action. Every single one of these patterns keeps repeating itself time and time again. Every single one of these patterns is not random. Every single one of these turning points is formed by Fibonacci levels. So what instrument is this, Mike, without seeing a price? Please tell me. You don't know. No idea what this is. Shock or not. It is not ES, Mike. Once again, you are guessing. It is gold. So what is constant between every single instrument? What is constant? Price action. So if you're spending your time mastering price action, which is exactly what I had been very fortunate to do in 2008, as nothing else was for me to do. And this is what I started questioning each and every day of my life. And this is what I mastered, and this is what I teach in the course. Market is flawless Fibonacci puzzle. Price action remains the same everywhere. You master this, you can trade any instrument, any time frame. Doesn't matter what you choose to trade. What is the difference? The only difference is trade management, risk management, and how long you hold position. And that remains the core. That remains constant. If you can trade 5-minute chart, you are a Superman who can easily trade weekly and monthly chart. Because if you understand price action on little junky short-term charts, it is drastically easier to trade long-term charts. Here's the example from our trading room, as you can also review on the blog and YouTube at your convenience. This is the charts from our day trading room. All posted on YouTube channel and my blog. Here's a couple of examples. This is what played out this week in the trading room. Here's a chart on decision point 1. This is the end of the minor trend. Exact same identical level, exact same hot pink Fibonacci level applies to any instrument and any time frame. This line identifies the end of the minor trend far in advance. If you're a day trader, you can see this level and identify this level hours in advance. On minute charts, minutes in advance. On institutional chart, the charts that's been present in our trading room for the last 2 years on oil, months and weeks in advance. Bullish rally on oil that started at Fibonacci reversal zone at the start of 2016 been respecting the end of the minor trend for many months. This been key Fibonacci resistance institutional level since 2016. This is what's causing major problem on oil. This is exact same level that's been in a play, recorded and posted on YouTube channel where price had been in war zone for days. This is a level that had been in a play this morning as crucial Fibonacci support. Never ignore this level. This level is always present. 1 second, this is a chart from last week. Let me find S&P from this week. So, this was institutional support. This is where bullish rally had started. This is a chart from our trading room. You can browse videos on YouTube channel. This was crucial Fibonacci resistance. Yesterday and this morning, this was the level we paid attention to. We closed yesterday trading room after 1 hour because I said there is nothing good is happening here. This morning I said you have to be very silly person to short into this level. This is exact same strategy, exact same level that you're witnessing right now on oil, on gold, Remember this support? What is the difference between S&P versus this chart? This is a chart that's been present in the trading room for years. It's a weekly chart. You don't have to wait weeks, you don't have to wait months to witness the accuracy of Fibonacci strategies. This playing out in front of you instantly. That's the only difference. Identical rules, identical price action. You master and can trade little charts. You can trade any instrument and any time frame as long as risk management and psychology appropriate for you. And this is my favorite part of the website. And this is what confirms that each and every single thing I teach, you can see on the website, under Learn or under the orange section, every single student trades different instrument. This is a student who started course a week ago, trading options. You need to hear and see what he accomplished already, as he understands the value of day trading along with institutions. Identical formula applies to index, stocks, futures. Every single trader learns the same thing. Doesn't matter if it's beginner trader, doesn't matter if it's hedge fund trader. Basic course, everyone learns the same strategy. Price action is the same. You unblock your vision, you'll be amazed how much you can see. And that remains constant. Every single level in front of you, completely proprietary. Every single person has different instrument they favor. What you choose to trade once you master price action and Fibonacci, absolutely up to you. No software, no indicators of any kind are used. Enter using price action, exit using Fibonacci. Fibonacci was discovered in 13th century. Fibonacci patterns found in nature, Fibonacci patterns found in price. Market is flawless Fibonacci puzzle. Exact same puzzle you're witnessing around you in nature, found in the markets. This is a mathematical sequence that applies to price action. Every single one of these numbers has very powerful value that determines the symmetry in the markets. Markets that are not Fibonacci markets don't have any value. Only Fibonacci numbers have value. And that's what creates market symmetry. And that's the key to the method. And that's what forms repetitive patterns. And what's most importantly to recognize, nothing in common between Fibonacci and indicators whatsoever. If you take a look on any platform, you will see very, very clearly Fibonacci not posted under indicators. Fibonacci is entirely separate. But putting Fibonacci on your chart randomly will never work. Knowing how to use Fibonacci, knowing where to enter, knowing where to exit is a key. And what separates indicators from Fibonacci is quite a lot. Fibonacci naturally predictive mathematical sequence. Indicators are delayed and artificial. Fibonacci can be used on any platform, any instrument, any time frame. If you found the indicator that works, consider yourself very, very fortunate, as most indicators look good only after the fact. If you found the indicator that works, it works only on specific platform, specific time frame. In addition, you have to pay the fees. If you understand Fibonacci, you can apply it to any instrument, any time frame you will choose. And that makes a world of difference. And that's the key. More time you spend with price action and Fibonacci, easier it becomes to see the market structure. More time you blocking your vision with indicators, less you understand market flow. And that's the case, that indicators look at how market behaved after the fact, when Fibonacci is the only predictive natural tool in the markets. And that's undisputable fact. And that's what separates the two. Indicators blocking your vision. You're removing indicators from your charts. You'll be amazed how much you can see. So if you apply Fibonacci in day trading, you start trading with drastically higher accuracy as long as you play by the rules. If you can use Fibonacci in day trading, you can certainly apply this to your long-term investment decisions. Here's a couple of charts that had been present in our room for the last 6 years. Here's a chart on S&P. This is a monthly chart. It has exact same identical strategy as you're using on day trading chart. This Friday I'm teaching long-term Fibonacci class where we take S&P all the way back to 2003. This is your investment chart. This is how you benefit from Fibonacci. This is a bullish rally from 2009 that reached reversal zone in 2014, 2015. Do you remember this correction? This is Fibonacci reversal zone. You don't need to wait months and years and weeks to see the accuracy of the method. All of it playing out in day trading room every day. This was crucial Fibonacci support. This is where buyers stepped in from when correction ended in 2016. This is how you benefit from Fibonacci for your long-term investment decisions. And if you understand that this was institutional support, when market crashed recently for only 370 points, you've taken advantage of this institutional support. As a trader who's been in a course 1 week, who shares what he's done on the website. So I highly encourage you listen to students, listen to graduates, and what they're using the method for. As this is exact same identical formula, Fibonacci at reversal zone on May 11th. Identical level as played out on monthly in 2009. How long will these levels be in a play? None of us know. Can be a couple of months, can be the next 30 years. This is your crucial institutional support, this is your resistance. This support is respected, institutional bias firmly bullish. You're using monthly chart, you're holding positions for a very long time. You're using weekly chart, this is the best chart ever to utilize for institutional volume as it's all in front of you. Bullish rally that started at the start of 2016 respected the end of the minor trend. This is exactly why this level is so hot pink, that you would never ignore this level, which is exactly the same thing that was playing out on our target yesterday on hourly chart. Instead of struggling for months, price struggled for 12 hours. Even this morning we were here, except this morning this was crucial day trading support. Do you remember this? 23.97, identified days in advance. Shorts not an option. If you ever short into this support, your success rate a whole lot less than 10%. So if you know where Fibonacci levels are, you trade between the levels, never into these levels. As Fibonacci identifies your targets in advance, no matter what you trade. No matter if you're using weekly chart, no matter if you're using monthly chart. If you can browse my blog, if you can see YouTube channel, go back to the start of 2016. As I said, bullish rally in a progress. This is a rally we haven't seen since 2009. Bullish rally heading to this area. That's exact same formula you're witnessing in day trading room every day. As long as this support is respected, bullish rally in a progress. Knowing where to enter, knowing where to exit your position remains the key, as entering position randomly based on levels never an option, as every single tick matters. And how to trade will depend on the chart you trade. So this is 3 different charts on S&P, from day trading to long-term charts. Identical formula on every single chart, each and every day. As price action remains the same. Doesn't matter if you trade hourly, doesn't matter if you trade weekly, monthly, 4-hour chart in FOREX. Here's an example of exact same Fibonacci resistance. Remember this day trading level on S&P? This is where pound been stuck for the last month. This is where pound struggles immensely. Identical strategy is on S&P hourly. And just to remind you, working down memory lane on Euro. Remember Euro at reversal zone in 2014? Crucial support on Euro weekly was 3400 because it's a weekly chart, had taken a couple of weeks to break through this support. This is a level I identified in 2015 as crucial Fibonacci support on Euro that Euro been holding for the last 2 years, because this is monthly chart. Unlike Euro, pound broke through the support because of Brexit. Remember that? 3600 on pound, pound at 119, pound broke through this level. Identical formula, as you witness every day in day trading room. Hourly chart is a guiding light for your day trading entry. How you will choose to use it, absolutely up to you. This is exact same level that was present on Apple, chart present in the trading room for the last 4 years, when Apple came out with the worst earnings in 13 years, but this was crucial Fibonacci support. Identical formula as on S&P this morning. No surprise. If I remove the name of the instrument, that's when you recognize. If you found the strategy that works, it should work on any instrument, any time frame, because price action remains the same. Never forget that. And if you invest your time into knowledge of the markets, not into knowledge of indicators, you'll be amazed how much you can learn. Fibonacci retracements cannot be traded without a strict set of rules. Fibonacci retracements can only be used properly when rules are met. And that remains the key. And that's what gives you opportunity to trade with clarity, with uninhibited view of the markets, with no conflicting delayed signals, with no sweaty palms. Absolutely crucial to understand what you do in the markets. Trading markets without complete understanding of price action, not an option. So this is what I teach day 1 in the course. This is what I will be teaching in long-term Fibonacci class, where you learn how to apply Fibonacci levels to day trading charts, starting from hourly and higher, which is what you use as your key Fibonacci support and resistance levels, all the way to institutional levels, using this formula. Rule number 1, trade only first impulse. Never trade corrective 2 and 4. If you missed your point of entry at the first impulse, look for the opportunity to enter at the start of the third. Never ever acquire position at the end of wave 3. If you do, your success rate drops to 20%. Here is the example. Here is oil. Oil daily chart that's been present in the trading room since early 2016. This was one of the biggest events on April 12th. As April 12th, we had one of the most bullish news in months. This is Fibonacci reversal zone that show you this is where market will reverse. In this particular example, as you can browse YouTube channel, and we will take a look at that later, levels projected in advance, levels identified well before the news, had shown to you. When you see the word reversal zone, you never ever ever enter into it. Doesn't matter how bullish the news is. Expect complete market reversal. That's what oil done. Oil collapsed 1000 ticks. You see word reversal, you do not buy into this level. If you are using this chart, you are holding position for a couple of days. Option traders love this chart from a couple of days to a couple of weeks. And that's been the reversal zone on oil. So small as a chart, shorter your hold period. This is where oil been stuck for the last 4 days. Bullish rally overextended. But remember the hot pink level on S&P where the core Fibonacci target was yesterday morning? That's where oil had taken a lovely pause for 4 days. Clear on that? Identical formula. I am recording this webinar. It will be posted on YouTube channel, which you can find always on the website under YouTube. Absolutely. And this is why I constantly encourage you, listen to students. I teach the same thing to everyone, unless the student chooses to take various workshops and various boot camps. But students apply to different instruments. Are you an option trader? Are you a Forex trader? For someone like that, if taken only 1 week to see the value of the method, all he did was send me rave emails how easy it is, and he's been trying for 8 years. Students holding the bar very, very high, as every single student uses the method however they choose. Some takes only 1 week. Some get it on class 1. Students who've been in the markets for 20 years, students who never pushed a button on their computer taking a course, hedge fund managers taking a course along beginner ones. They all learn exact same formula. And that's what I'm teaching in bootcamp this summer, June 12th through 23rd. We're down to 9 spaces. Bootcamp is the event that plays out only a couple times per year. Bootcamp is part of the course. Graduates come back to polish their skills, to take the bootcamp, paying additional fees. New students are not paying additional fees for the bootcamp. It's included in the course fee. 1 day in a bootcamp equivalent to 1 week in the course. And that's what we do. I teach you daily that market is flawless Fibonacci puzzle. What you choose to trade, absolutely up to you. Here's another one of the examples of the importance of reversal zone and never acquiring position at the end of the trend. This was collapse on Apple in 2015. If you know the earnings on Apple in 2015, earnings were stellar. Hedge funds were buying Apple left and right. No one could understand why in the world Apple was crashing. Because Fibonacci reversal zone had been in a play. There is something drastically different about Apple right now. This is a picture-perfect example. You cannot short market randomly because Fibonacci reversal zone is present. Apple been giving very weak corrective moves. The one that lasted here for 5 weeks, the one now on Apple, last 3 weeks. No reversal. And that's how price testing your knowledge of Fibonacci. And this is picture perfect example from the world of hedge funds. When I work with hedge funds, I don't look at any news events, I only respect news due to volatility. Here's a picture perfect example, as I hope you are reading the financial publications and you know what earth-shattering event this been for hedge fund world. Long position on Valiant acquired by top funds in US. Where was it acquired? It was acquired extremely close to reversal zone. I wrote the articles in 2015 stating, this is insanity. This is where you short, not buy Valiant. Students like Ed know this after 1 week. Top hedge funds in US chose to buy Valiant because Valiant had stunning earnings. Fibonacci reversal zone overrides any earnings, any fundamentals, any indicators. So I hope you know this about Valiant, because if you don't, I certainly hope and pray you will remember that if you know Fibonacci, you trade better than top funds in US, as this is the road to disaster using fundamentals. As Aikman down 90%, more than $4 billion as of now. Ouch. And that's what I show students every day. You know Fibonacci levels. You trade a whole lot better than top funds in US that do not use Fibonacci levels, when in fact top hedge funds in US using Fibonacci. So Google Renaissance Fund and see what they use, as this is the core to the markets. Nothing else matters. You master price action, you master Fibonacci, all you have to do is identify what you want to trade. Nothing else matters. Nothing else works this accurately in advance. And this is as basic as price action will ever be. 5-wave pattern keeps repeating itself if trend is major. If trend is minor, trend ends at wave 3. Nothing less, nothing more. On Nasdaq, identical structure on Euro. Something that looks as a spectacular bullish trend suddenly reverses, but Fibonacci support is respected. And that's the key. Exactly, Mike. They're using mathematical sequence. That's exactly what Fibonacci is. And that's what students do on the website. And that's exact same thing I teach to anyone who trades oil. You know where Fibonacci levels are. You do not enter into Fibonacci levels. It's your ultimate support. It's your ultimate resistance that you know in advance. This chart will never be easier. If you look on this chart and you do not understand, you have so much to learn, because market will never be more clear than this chart. This is as basic as market will ever be. This particular trader got a little lucky, catching a little end of the trend, acquiring position at the end of wave 3, when in fact your success rate is only 20%. Buy the bottom, sell the top, but only if rules are met. Here's another example. I worked with hedge fund, a couple of very young guys in their early 30s. Bought FIT when FIT was at 80. They came to me and said, oh my God, how come FIT is crashing? I said, because Fibonacci said so. And they said, we're holding FIT through earnings. Earnings will be spectacular. I said, bad idea. I don't care what the earnings are. Fibonacci reversal zone in front of you. 80% of complete collapse. What is your edge? Do you want to trade with 80+%? Or do you want to take your chance and hold position into earnings? They did not listen. They thought, very cool gadget that has excellent earnings will skyrocket. FIT collapsed from 19 to 9, showing you earnings do not matter. Showing you pay attention to the price. Respect Fibonacci levels and remember, knowledge is power in everything you do. Blocking your vision of price action will never work. And that's all that matters. And if you apply Fibonacci levels properly, every single one of these turning points making perfect sense. And if you have no baggage, if you psychologically not addicted, not having any bad habits, you should do as well as Ed, who've been in the course 1 week. So, and that's the core, and that's what he shared in his email that I will gladly share with you, because I always let students speak for themselves. So here's one of his emails. 1 second, please. So listen to students and what they do, as that's all that matters to me. So here we go. So I would highly encourage you, listen to students and what they trade, as that's all that matters to me. As he understands, I need to trade with institutions, not against them. No reason to mismanage my trade. And that's all that matters. 1 week in the course. Send me the screenshot, which I will show you next. And that's a key, because he understood the value of trading with institutions. And that's exactly what played out in the trading room on that very powerful morning. Remember that? This is overextended rally. This is where it started. This is where he's taking advantage of the market, along with institutions, not against them. As this is S&P daily chart, this is institutional support. This is where the bullish rally is right now. So if you were shorting market when market collapsed, you were shorting into Fibonacci institutional support. Level present in the trading room 4 weeks in advance. And just to remind you, this was night of the election. Here's another picture perfect example. It did not matter who won the election. Did not matter if Hillary or Trump won the election. This is Fibonacci reversal zone, just like Valiant. You know where this level is? You do not short into it. 80-85% chance of complete reversal. You know the rules. Rules are met. You take a trade. You know these levels. You're trading better than Soros. You're not shorting the market because Trump won the election. This is where we are right now. So please take a look at very clear correlation of these charts, as we've been dealing with overextended bullish rally. Everybody is seeing what's been happening in the markets. So if you're complaining the markets had been extremely slow, this is the core moment in your trading. Anyone and everyone can trade when market is extremely volatile. Bullish rally 600 points later, exhausted. But if you understand institutional levels, and if you day trade with institutions, if you're not participating in corrective fluff, that makes a world of difference. Because take a look what the price been doing 70% of the time. Brutal corrective fluff. Brokers heaven. If you choose to ignore this, if you say, oh, it's S&P, good luck on that one. This is the key. This is the core. Regular market conditions plays out 40% of the time. Until you master corrections, success is not possible. Until you realize that your constant defense is respect for corrections when you're entering trading jungle, not participating in this, not staring at the screen is the key. Not trading against institutions but with institutions. As I warned you this morning, all recorded on video. You want to short? You're shorting into Fibonacci support against institutions. Good luck on that one. Too bad so sad it took price 6 hours after the open to take off. 6 hours after the open. But that's a level identified in advance. And that's all that matters. What you trade, absolutely up to you. Shorts into the support, not an option. And as discussed, we are at historical highs. Prior, this is where you had flawless short. Does it mean you should randomly short the market? Absolutely not. Historical highs meant to be broken. Shorting randomly will never work. Fibonacci levels are always present. Fibonacci support and resistance are always present. How to trade these levels? You must know the rules. You must know where your entry is, where your stop is, where your target is. And that's not something I can teach in 1-hour webinar. But it's something I can teach in bootcamp. That's something I can teach in the course. And that's what I do every day. And that's all that matters. What students say, what they accomplish after graduation of the course. Formula remains the same. Ladies and gentlemen, I look forward to your questions. So if you would like to come to the website under Learn, I would highly encourage you. Review the information about bootcamp and realize bootcamp is part of the course, included in the course. If you will take a bootcamp, more than likely you will not have to come back and take additional 6 weeks in the course. Number of students who take bootcamp master everything in 2 weeks. Bootcamp included at no charge to new students, graduates of the course paying additional fees. We have some graduates of the course who had done 6, 8, 10, 11 bootcamps. This is bootcamp number 11 in 7th year of the website. I have absolutely no plan for another bootcamp anytime soon. After you review the information on the website, feel free to contact me. But please do review the information first, as this is included in group and private mentoring fee. Private mentoring 16 weeks, group education 8 includes boot camp. In private mentoring, I practice your execution. I concentrate on your technical skills. We work via screen sharing. This is not something I can do in group session. While in private mentoring, you have access to all group sessions. Group course 3277, private mentoring 7977 includes bootcamp savings of $888. All posted on YouTube video, all works with exact same accuracy as stated. All you can witness on YouTube or in the trading room. As 3-minute chart, 5-minute chart has exact same accuracy, and that's what I was showing to you. Every single Fibonacci level you see on hourly, on weekly is the key when you entering the trade on 3-minute chart. 3-minute chart will give you exact same strategy as hourly, weekly, and monthly. And every single one of these videos show you that. And that's the reason for the trading room. Time and time ago, again. And that's what I teach in the course. How to apply these levels, how to draw these levels. And that's what I demonstrate in the trading room. On charts from 1 minute, 3 minute, 5 minute. 6, 7, 11, 25, 13, 50 minutes. This is all of my day trading charts. What chart you trade? Absolutely up to you. 40 charts in front of me. You don't need to wait hours, days and weeks to witness the accuracy. That's exactly the purpose for the trading room. So, browse YouTube channel. As we are entering holiday week, you will receive trading room invitation Tuesday morning via email. So pretty please monitor your inbox and check the spam for the next week, Tuesday through Friday trading room invitation. If you would like to join us in a bootcamp, sooner you start, more prepared for the bootcamp you will be. You don't need to wait till June, and I cannot guarantee you that any of the spaces will remain open. Please don't make that assumption. We're down to 9 spaces. We keep this small and sweet. That's it. In the trading room, you witness the accuracy of the method. Trading room open only 10 to 12 hours per week. In the course, you learn the method. I run 2 consecutive rooms side by side. In the trading room, you see the accuracy. In the education room, you witness and learn the accuracy. So while in trading room, you see the trades. In education room, you learn the trades. So you see the trade on 3-minute chart. With students, I dissect the trade. With students, I meet before trading room open, after trading room open. Yesterday we closed the trading room after 1 hour. With students, I meet before trading room open. There is no shortcuts to success. Being a follower in day trading, the worst idea ever. So please browse YouTube channel. Please log into the trading room on Tuesday as you witness everything recorded in live markets, as you witness what was posted in the trading room from yesterday, from day before, all of the trades. Trading room included in the cost of the course for 8 weeks in group class, 16 weeks in private mentoring includes trading room. Except you are not just witnessing the trades, you are actually learning them. 76.4 has no meaning to me whatsoever. None. Any other questions, traders? So this is a question about gold, and this is chart on gold. As you can see, exact same reversal zone where bullish rally started in 2016 and reached Fibonacci reversal zone where price reversed from. Correct? You remember what happened on Apple? So, when price comes to reversal zone and you see any kind of bullish signal on 3-minute chart, you see any kind of bullish signal on 15-minute chart, you understand your chances of failure 90%. You understand that your bias is only bearish. This is where gold collapsed from. But take a look, very important moment. Gold reached decision point 2. Gold did not collapse until reversal zone for a very good reason. Making assumption that gold moves from reversal zone to reversal zone is absolutely speculative. So the hedge fund traders that you can listen to on the website taken advantage of gold position since December 2016 until here. This is when we discussed, and this is what you will learn in the course. This is your key target. After this, you're moving your stop outside of break-even. If you're not respecting this as your target, you need to ask yourself a question. Do you want drawdown of 80%? How much did gold collapse? Substantially. Gold collapsed $70 until this hot pink support. Remember what was happening on S&P this morning? That's what was happening on 1-minute chart. This hot pink support. This is identical strategy. Identical method. Doesn't matter if you trade 3-minute chart. Doesn't matter if you trade gold weekly. You understand the importance of this level that will never be 76.4, and you understand that this is a crucial target. This was a range on S&P. Identical levels as on gold weekly. Does this look familiar? Exact same level where S&P closed. On 3-minute chart, on hourly, and on gold weekly. Knowing what to do with your position remains the key. And that everything. So, I will appreciate if you guys don't call me during webinars, my phone ringing off the hook. If you would like to call me after the webinar, after reviewing the information on the website, I will appreciate it. So, I hope this answers your question about gold. So, in private mentoring, I focus on the instrument of your choice. In long-term class, this is weekly chart we're taking a look at, which is exact same rule as on pound weekly. So, next question I received about pound yen weekly. Pound yen is a beast of the indices. Pound yen is absolutely brutal, but you asking me pound yen weekly? Here we go. So this is pound yen weekly. Let me remind you, where collapse had started on pound yen weekly. Did you short the market from here? Did you respect the end of the minor trend? This was crucial Fibonacci support. The end of the minor trend is out. Pound yen weekly went into collapse. Let's take a look what in the world is happening here and why are buyers coming? If there is something that's not random about this, absolutely. It's Fibonacci reversal zone on pound yen now. Or is it a different level? Let's take a look. This is where pound yen is now. This is where pound yen is struggling. Exact same level that remains crucial Fibonacci support on S&P this morning. No surprise. Buy the bottom. Do not acquire position near hot pink line. The end of the minor trend is present. Never ignore this level. And I also hope and pray, if you're trading Forex, you understand you're trading the most expensive instrument on the planet. If you're trading Forex, you understand for pound yen, if you're trading standard lot, your fee is $40–50 per round trip. If you're trading pound yen as a future, your fee is $4–5. You understand that trading 5-minute chart, unless you have 7-figure account, is extremely expensive venture. Unless you're trading micro lots, unless you're in Bangladesh or India, that would be your only excuse to trade 5-minute euro. And that remains the key. Accounting and trading is everything. Knowing what you're paying, knowing how to set up your platform, never to be ignored. So let me remind you where euro is struggling before I answer your question about 5-minute chart. Does this ring a bell? Identical level as on S&P this morning. As you can see on YouTube channel, on little baby's 3-minute chart. That was key target yesterday. This is where price stuck in ultimate pain and been for a long time. But no surprise where it came from. Remember that? Crucial support to crucial resistance. That's the dance on euro since 2015. So, if you're trading 5-minute euro, I hope you know how expensive it is to trade euro, because at the bare minimum you're paying $20 to $30 per round trip. So if you're spending that kind of money, I would hope and pray you either trading micro lots or you remember why FOREX regular standard transaction continue being reviewed and banned in multiple countries. Something I just read about one of the top countries that just banned FOREX for retail traders because it's extremely easily manipulated and it's the most expensive market on the planet. This is Euro 5-minute chart. This is where you monitor for long point of entry. Clear on that? And this is a place you never ever ever short near. Ever. This is what you're witnessing each and every day in the trading room. You don't have to wait days, weeks or months. But if you can do this, you can invest long term with drastically more ease. Any other questions? Please do ask. DHCP, please start speculating. You're killing me. It will not work. It's not valid level in my method. Everything I teach is completely proprietary. I'm not using anything to do with 78. Okay? Second time. Nice try. Any other questions, traders? I see a couple of people typing, so if you have questions, few more minutes and I'm out. Can I do bootcamp on its own? I'm not sure what you mean by that, as all the classes are live, just like you're witnessing now. All the classes in webinar room, just like now. Students from Florida to New York, from beginner to hedge fund trader to Saudi Arabia to London to Barcelona. My pleasure, Chris. Any other questions, traders? I see multiple people are typing. Pretty please do ask. My pleasure, Mike. You can only do bootcamp. I cannot tell you how long it will take you to learn, as you can listen to recent students who learn everything within 1 week. I do not know your background, you do. I do not know how bad your habits, how healthy your habits. Are you a beginner trader or are you a trader who's been in the market 20 years? Every single student learns the same thing. 80% is psychology and your bad habits. If you are attending boot camp, you will learn in 1 day what you learn in the course in 1 week. So absolutely not a requirement to do full 8 weeks. Most students who do the boot camp finish the course in 2 weeks. Course 8 weeks, 1 day in boot camp, equivalent to 1 week in the course. And again, listen to students, as every single person mastered at different time and within a week. I have not seen him forever. Neither 78.6 or 76.4 matter to me. Zero, zilch. That's nothing I teach in the course. Speculation will never work, I promise you. You learn exact entry, exact stop, exact target, plus long-term Fibonacci levels. This is rule-based, indicator-free method. TJP, you are killing me. Any other questions? Нет. Any other questions? Thank you, traders. My joy and pleasure being with you. If you have any questions, I'm around this afternoon to answer your questions. Pretty please review the information first. If you're considering signing up for private mentoring, please speak with me first. Some of the days book until the end of the year. I want to make sure if I meet with you one-on-one that it works with your and my schedule. So don't sign up for private mentoring until you speak with me first. If you would like to concentrate on particular instrument, if you would like to concentrate on technical execution, private mentoring is the way to go. It also includes all the group classes. In addition, follow up entire year. And as you can see on the website under testimonials, which I have a libraries of, I meet with students in the US and abroad all the time. Last month I was in Asia. Prior months I was in California. I'm in the middle meeting with students. Scott Doctor in California, Michael from Sacramento to Laguna Beach just for lunch, William in New York. Friends bringing friends to the course. Every single trader has different background, has different story. What you trade, absolutely up to you. Look forward hearing from you. Thank you, traders. Contact information found pretty much on every page. info@fibinstitute.com or 925-257-4298. Long-term Fibonacci class this Friday at 11 a.m. EST. If you sign up before the class, it's a fantastic way to prepare for next week, Tuesday, when we start from scratch. Instantly in Friday class, you will see that using anything other than Fibonacci and price action will never work. As in Friday class, we dissect how to identify these levels on short-term charts, how to use this in trading 1 minute, 2 minute, 3 minute, 5 minute chart. Because if you know that this is Fibonacci support, if you understand that this is crucial Fibonacci reversal zone, you would never be tempted to short into. Identical formula applies to weekly and monthly charts, except you don't have to wait for weeks and months. You're seeing it instantly in live markets. Thank you, ladies and gentlemen. Look forward to hearing from you. Have a marvelous afternoon.